Peter Rose, Longwood Currency Trading. Good afternoon. It is a chilly and rainy late September afternoon 2021. What a wonderful time to talk about the issues and differences, in my opinion, totally, between long-term trading and short-term. And I'm going to preface excuse me, the discussion with a series of events that have occurred with me over the last few months, couple of months, in highlighting some example trades, both long-term that I've done and short-term, to give you kind of example of what my background is in this, so that I can then kind of lay the whole thing out for you as to what my opinion is, and I'd be more than happy to exchange thoughts and stuff with some of you guys in regard to this. I'd especially like to hear if you're a long-term trader and what your success has been, because my success is not too good. I trade long-term and my anal sphincter goes like that, and I don't know why you do that. I just feel that I'm far safer down on the shorter-term time frames, doing a day trade thing. I'm flat at the end of the day, and it's easier. I have to know anything about macroeconomics. Anyway, my examples on this that have brought this to the forefront of my mind here is that, I don't know, 6 or 7 days ago, 6 days ago, I was doing some trading, and I was up about $500 in it was about an hour and a half. I was getting ready to shut her down, and I saw that the price looked like it was changing its characteristics. I reevaluated the situation. I had closed out. I was $500 up. Trading a $40,000 account. Well, I was trading $40,000 of my bank. Let's put it that way. And so I was up a little under, a little over 1%. And I looked at the chart and I thought, well, man, there's a tremendous opportunity here for a carry trade that I think I can make some significant money with relatively little risk. That's the qualifier right there. So I sat with that trade for 6 days and just closed it out today. I'm doing this video on the 28th of September, and so it probably won't publish it until first week of October. But nonetheless, held that trade for 6 days, and it went massively, and I'm talking about massively against me. I was 4 hour out at a couple of points. But I had conviction in my economic analysis of the market at that time and some of the other thoughts that I had, and I knew I was going into a longer term trade, and I couldn't just base that on the little squiggly lines on the chart. I had to do some rely on more of a fundamental analysis approach, looking at the news. What was the news? Not current news, because you can't trade on current news, but where did things look like they were going between the two pair countries? And I felt fairly good about that. Turned out that this just reinforces my feeling that you can't trade based on not only current news, but you can't based on what your feelings about the economic conditions are. Because as soon as I got into that trade, and for 5 days of that trade, that son of a bitch was so far out of a profit, you need a Greyhound bus ticket to get to it. And so the economic reality of the world isn't reflected until days later, a week later. So now, what I was seeing a week ago as to what the news was and everything that was going on, and the weeks before that, leading up to this conclusion, hey, let's try another day trade. Because I'd made a lot of money on the previous long-term, I mean, not a day trade, let's try a long-term trade. because I made a lot of money on my previous long-term hold trade. And so I went into this with all that analysis. Now, I closed it out today. I made $1,300. So I did okay, divided by the 4 days that I held it for 6, but you know, you can only actively trade the thing for 4 because you're losing 2 days or a day and a half on the weekend. So anyway, if you divide that out, 1,300 by 4, you know, it's $370 a day. I mean, come on, I can make more than that without the anal sphincter tightening drama of being underwater for 5 days. And so I just find that interesting, because the day that I went into that trade, I was $500 up on a $40,000 account in about an hour and a half. I sit with this fucker for 6 days, and I make the equivalent of $325 a day, for a full day. And that's just not, oh, here's one trade, let me cherry pick this out. The couple of trades before, a couple of weeks before, I had been in another long-term trade, and I had closed that out for a $7,800 profit. But I had held that for a couple of months. Carry interest on that was brutal. But the 2 weeks prior to me taking that long-term trade, I was up, after 2 weeks of the month, I was up, I think it was 5% or 6% on my bank. And then I got into this long-term thing. And again, I did my evaluation. This is what I think it's going to be. And it went in my favor. And so I added some lots to it. And then, oh, we got this guy by the balls. Let's take this fucker way out of. Yeah, and so off that price went. And I sat with that for a couple of months. And I've recounted that sad tale to you, well, at least a couple of times in the videos, and said, yeah, I came out of it, I made $7,800. Some of that I lost in some carry interest, but it was the time that the trade was held, and you divide that by the number of days for the risk that you took and the amount of aggravation. It just isn't worth it. It isn't worth it for me. Now, here are the advantages as I see them for long-term trading. I see the fact that you're in there for the long haul, and so therefore you're dealing from a statistical standpoint, a large sample size of time, such that if you have good trade habits, and good trade better than habits, but actual concrete metrics, then over the long run, you'll come out fine. Now, I can say that based on how you would apply those mathematics to holding a trade over long term and what you can make balanced on the bank size that you have. But I can also look at having good metrics trading short term and what you could get on a daily basis averaged out over that same long term period. And let's just say they come out jump ball. You make the same thing. First of all, you don't lose the carry interest. I mean, you could be gaining the carry interest depending on what direction you're trading the pair on, and what the interest is based on. And I did a video on that. So if you don't understand when I'm talking about carry interest, you better understand it, because the last time I was in a long-term trade, it cost me $2,200 just in carry interest for a couple of months. But let's just say your if I day trade and take that daily profit averaged out over, let's say, a month holding period for a longer term trade, and you compare the profits, adding up all those daily profits with the end profit that you get on the long-term trade. Let's just say they're even. Does that make them equivalent? In my mind, it doesn't. Because number one, and not the main reason, but number one reason I'll mention is that carry interest. You don't have carry interest when you close the trade before, well, here in the U.S. At time zone at 5 o'clock, when the clock ticks over again, which is, I think, Greenwich Mean Time, when everybody sets clocks by. I don't know what it is. It's just a New York close, and I guess maybe it's the broker that sets the carry interest. Don't care. But if you hold it over, I know if I hold it over from 5 o'clock, I get hit with a carry charge. So I don't get hit as a day trader. So let's say I make $300 that day. I don't pay any carry interest. I make $300. I walk, I got $300. If I make $300 a day on average for a month, I'm paying $30 of carry interest, which could be $2 a day, $10 a day. I mean, I don't know. It depends on how many lots you're carrying. But you have that. And that's there, and that comes off of your profit. So now if you look at the profit after that fact, you're less than the $300 a day. Let's say that's not the case. Let's say that you made more on the long-term trade than you did on the day trade average. I don't have any of the aggravation as a day trader that you have to go through stewing over a long-term trade. I don't have to trail a stop. I don't have to worry about price chattering or staggering, as I said in my last video, talking about when to get out of a trade. I don't have to worry about a radical economic catastrophe that would pin bar me out of the thing and cause me to go into hyperventilation mode. I don't have any of those issues as a day trader. But as a long-term trader, you have that. You can't just say that you're trading off the daily chart so you check your prices at 5 o'clock and make your decision for what you're going to do the next day, because you're riding with that all the time you sleep. I mean, when I wake up in the morning and I'm in a long-term trade, the first thing I want to know is what the hell's going on? How did I do? What's happening? Oh shit, I'm 2,000 out. I'm 1,000 back. I'm 1,000 up. Should I take my profit? Why go through that aggravation? I mean, I don't know. I don't feel the aggravation is worth it. But the longer-term traders who are successful, and I don't know how they're successful, but they are successful, make out in that long run well enough, I guess, to say that they're safer. I think one of the reasons you long-term folks out there say that us day traders are, it's a riskier environment, is because you really can't translate the skills that it takes to be a long-term trader down into the shorter-term time frames. You can't. I can take my short-term skills and map those up into the long-term time frames, but a long-term trader can't take his skills and map them down into the shorter term. And there are lots of reasons for that. I'd be happy to chat with you about it, but I'm not going to go into it here. But that's just the way that it is. And I got a degree in physics, and I got a lot of math background, and I've been looking at these currency prices for 2 years. I mean, 2 years, shit. I've been looking at these prices since 2007, and doing computer simulation analysis and fundamental analysis and all that other kind of crap since 2007 against these price movements. So I think I know what I'm doing. And I started out as a long-term trader because that's what all the video talking heads and all the rest of you out there are telling you, because you're safer out there. Yeah. Well, I followed all that advice and lost $40,000 because of that advice. Not because I'm certainly stupid or anything. So I can see where the long-term traders who are successful, who can break through that barrier, the 5% or so who do break through that barrier of successfulness, because 90% of the traders lose 90% of their money in 90 days. Now, some are idiots and they come back and they reload and they lose it again. So I mean, I don't know how those statistics were produced by a large major retail FOREX broker who did an analysis of 43 million of their client transactions and came out with those statistics. And so everybody seems to ride by it, and it doesn't take a genius to look at the different brokerage outfits that are out there and get a sense for what they're doing, and some of the people that have been trading for a long time to verify that 90% are going to lose their money in 90 days. And I just wonder sometimes, I wonder all the time if it isn't because of the education that's out there that's misleading. And I think part of that educational that's misleading is you can be safer up on the long-term time frames. I don't think you can. I mean, I think that if you are learning how to trade, you're going to lose your money whether you're a short-term trader or whether you're a long-term trader, because you don't understand entry theory. You don't know how to do that analysis correctly, so your stop's going to get hit. You can hit a short stop, or you can hit a long stop where you've left it there for price to fucking breathe. It doesn't make any difference. If you don't know what you're doing, you're going to hit the stop. You're going to lose your money. But I think under the proper guidance, if you take somebody who's into the long-term, learning long-term stuff from a serious person who understands long-term trading, and you do the same thing with somebody in a short-term environment, you're both going to be successful. Because there are ways to be successful in any part of the trading. It's just that where are you safer getting started? Look, I've been teaching karate for 50 years, and karate and self-defense. So the object isn't how good the person can be after 5 years. They have to know how to do something in 10 hours. In order to warrant them continuing to study for 6 months so that they can get fairly good at self-defense. They have to get good enough at self-defense in 10 hours of practice in order that they can stand up for themselves and defend themselves. So I have to be able to go through all the information and skill sets that are out there in the martial arts, abstract all the key nodes of that out, and present that to that person so that they can become skillful in the short time frame, because they're not going to be successful otherwise in a longer time frame, just learning the way most people teach karate before they get their asses kicked and try to use that stuff, because it's not that material isn't applicable in the short term. You know, you can study martial arts and have a certain amount of skill. Advanced level is generally called brown belt level. You can take 4 years to get to brown belt level, or have the ability to get to brown belt level. I mean, I know a lot of instructors that hold their students back for 3 years before they promote them to brown belt, whereas my guys could get brown belt in anywhere from 8 months to a year and a half. So you can't really compare the abilities there. But you should be able to get a brown belt level ability in that shorter time frame, 8 months to a year and a half. You shouldn't need 3 years to do that. They do that so that the student can go into the brown belt level competition with 4 years experience, so he's sparring with folks that have 6 months to a year and a half of experience and kicks their ass to win a trophy. So what happens when you get out on the street? Well, the guy can still fight because he's been doing it for 3 years, but Jesus, you know, from the ranking structure and the material that's presented, it's the same thing in currency trading. There's nothing wrong with the material that's being presented. If you know how to long-term trade already and you're successful at it, then you can increase your ability. But you can't teach a beginner long-term trading. I don't believe you can. And I've been an educator for 50 years, and prove me wrong. And so the differences between the long-term trading results and a day trader's results for a rote beginner are going to be jump ball the same if you don't have the proper instruction. And if you're going to get proper instruction as a long-term trader, it would be better for you to learn how to be a day trader first so that you could make a lot of mistakes and learn what not to do, as Jesse Livermore said, so that you can learn what to do. And then once you learn what to do, all you need to do is expand out from your 5-minute or 15-minute day trading charts to a 4-hour or a daily chart. And do your trading up there because it's fractal. It'll all map directly up there. But you're not going to be successful learning long-term stuff or complex trading like staging, for example, or averaging in, rounding up. Those are all sophisticated techniques for experienced traders. It's easier for somebody to watch somebody else do that and say, oh, okay, I'll do that. When I see this particular thing, I'll do that. But that's all that they're able to do. That's like somebody watching somebody cook an egg. You think you could do that? Yeah, okay. Well, cook an omelet now. Or make us a chili stew. You can't do that. So you can't call yourself a cook. Folks, just look at the reality of the world around you before you go jumping around on some bandwagon that's saying that day traders are in a more risky environment. When you jump into a pool, if you don't know how to swim and you jump in the deep end, you're going to drown. If you jump in the shallow end and you don't know how to swim, you're going to drown. Do you want to learn how to swim in the deep end? There's danger there. Why not learn to swim in the shallow end? Because at least the first thing they're going to teach you is bounce off, right? And so once you learn bounce off, then you learn how to float. And once you can learn how to float, now you can move off into the deep end because you're going to be okay. But you've got to learn those really basic skills first. And so the issues between doing short-term trading and doing long-term trading, I think you really need to look at a balanced set of those before you make your decision as to what you want to do when you get the skill, or if you are currently doing long-term trading and you're not having the success that you think you should be based on the education that you've had, maybe you just need to reevaluate why that education has failed you. That's what I had to do. It cost me $50,000 to, what happened here? And as I've said before in other videos, I had $5,000 left in my account after I lost that 50, and I just had to reevaluate. I threw out all the education. I'd watched hundreds and hundreds of videos. I'd read hundreds of books. Well, you saw from the video the other day that I did. I showed you my library. 3 full shelves of just pure trading books, and another 2 shelves of stock market and technical analysis and fundamentals and economics and stuff. I mean, half the library is filled up with trading-oriented and economic books. Come on. You can do all the studying and stuff that you want, but if you look at implementing it in the wrong way, you're not going to be successful. So you really have to look objectively, what is your goal? What are you trying to do? And I said many times, if you're not serious about trading, or you're just watching my trading videos for entertainment, that's fine. But don't try to do any of my stuff unless you're really serious about taking those skills and building them up to the point where you could trade a big account. And a big account would be $30,000. That's a pretty big account. For most people to come up with $30,000 to put into a trading account, that's a big account. But look, are you looking to have a job that pays you $5,000 a year? You're looking for a job that'll pay you $30,000 a year. $40,000 a year, right? Well, I mean, if you're a professional or somebody, or a software engineer like I was making over $100,000 a year. Then you need to go to school and you need to learn all kinds of different stuff that you have to learn if you're going to drive a backhoe. But look at your situation. Look at what you're trying to accomplish. If all you want to do is trade for a hobby, and you're going to trade with 5 minis, or maybe you'll put $10,000 in there and trade around, and looking to make 10% on your money a year, which is better than sticking it in the bank at 0.5%. You get that? 10-year T-bills only paying 1.5%, I think. 10 years, 1.5% a year. You got to hold it. So the only way that I think people can benefit from an education is by matching up what they want to do with an educator, or with a book, or with a course, or something like that. And I don't take people, I don't have the time to deal with a lot of people, so that's why I'm as expensive as I am. Because I'm not going to teach somebody who just wants to make, a couple of $1,000 a year on a $10,000 account. I mean, that's 22%. I mean, or 20%. A couple of $1,000 on a $10,000 account, that's 20%. That's about $200 a month. I mean, that's 20 pips. 20 pips a month that you have to make. I mean, how fucking tough is that? 20 pips a month. Of course, you could lose that, but I mean, once you know what you're doing. So, but is that all you're looking to make? Trade a $10,000 account, make $2,000? What's that going to get you? Maybe half of a Disney cruise or something. I don't know. I'm more interested in looking for somebody who's really having a tough time pulling money together, and if he was able to pull $3,000 together for a trade 3 minis, that would be a feat for him. I want that person to want to have a $30,000 account. Now, I can teach you how to get there, because I teach people how to manage money and go for their goals, or I just tell them read The Automatic Millionaire and maybe some other stuff, and you can do that. Jesus, if you put $100 if you put $100 a month into a no-load mutual fund, and you did that for 10 years, you'd have, I don't know, 6 figures or something. I don't know what you'd have, I forget. Compounding at 8 or 10%. What do you want to do? I mean, the stuff that I talk about on this channel is geared for the person who wants to get to that point where they've got a $30,000 account that they can trade. Because if you make 20% on a $30,000 account, that's $6,000 a year. If your job is paying you $30,000 a year, are you going to get a 6%? Are you going to get that big of a raise, a $6,000 raise? A 20% raise. You're going to get 20% raise on that $30,000 a year job? You're not. You get 3%, 5%. So you have $30,000 in the bank, you make $6,000 a year. That's a shithouse full of money, and that's only at 20%. I mean, I don't. You can't talk about, well, you could make 50% in 6 months. Jesus, I took that $5,000 account. Sorry, I wandered off the track here. But after I lost all my money and I had that $5,000 left, and I looked objectively at things and I said, this is stupid. All this education is wrong. It's wrong. And I experimented with that about $1,000, a mini account of that for a couple of weeks. And I said, could it possibly be this easy? Is it that simple? And so I took the $5,000 and put it in and started trading it, and I doubled that in 4.5, 5 months, I think it was. I've told this story many times. That's not to say I could take a $500,000 account and double that in 5 months, because the dynamics change. But by doing that, I said, I understand how to trade. One of the reasons that I understood how to trade was because it was only 5,000 bucks. If I lost the 5,000, it wasn't going to impact my lifestyle. I'd already lost 40. So what's another 5 to try to learn how to do it right? So because I wasn't focused on the money, I was focused on the pips, and I was focused on trading the right way. That enabled me to double down. And this took me a long time after that, because I realized that we're going to do that again. Let's get down to some serious trading. Let's put 10,000. Let's put another 10,000. Let's trade with a $15,000 account. Traded that for a while. Let's trade with 20,000. Let's work on that. So I've just been having fun with it and learning and making my mistakes along the way. I mean, I've lost some significant money as I've gone through, but I know why I've lost that money, and I've been upfront with you on this channel about that. But as I've gone through, I mean, I sold my last building. I have six-figure account capability. Am I trading six figures? No, I don't trade. Why should I? I don't need the money. I'm not trying to prove anything, because as soon as I try to need the money or try to prove something, then I'm going to take more risk than I should, and I'm going to do stupid shit. And I'd rather just become very comfortable edging my way up. And you know, this last trade, like I said, I traded $40,000 in that account. A few trades before, I was trading $60,000 account. A couple of times before that, I was trading a $10,000 account. So I'm varying it and going all the way through, because I'm trying to be consistent with the way that I trade, regardless of the amount of money that I trade. Because when I throw six figures at a position, I want to be really, really sure that I'm going to be as consistent with my methodology with that amount of money, well over $100,000, as I am if I was trading a $10,000 account. Yeah. So that's where I'd like you to get to. I'd like you to get to the point where you've got $30,000. Now, you're lucky to come up with $3,000 now. You're 22 years old. That's fine. That's fine. Man, I wish I would had somebody to teach me currency trading. I'm 72 now. I wish I would have had somebody teach me currency trading back in 1973 when I first started buying real estate. Because let me tell you, I've made a lot of money in real estate. Well, I retired well over a millionaire from my real estate. I've lost $1 million twice in my life, net worth, because of real estate, because of the economic crashes and stuff. And I made it back each time, but it took 10 years to do that. But if I would have known currency trading back then, sure, I might have lost $3,000 or $10,000 or $20,000 all the way back in there. But man, once you learn how to protect yourself, it's unlimited what you can do. So if you're 23 years old or 33 years old or 40 years old or something like that, and you've got many years left in your employment period, and you're still young enough to be willing to take a chance and to risk some money and to lose some money, because you're going to lose in the beginning, right? Regardless of whether you want to be a long-term trader or short-term trader, you're going to lose. That's why when I start you out with a $1,000 account. I don't care if you're a multimillionaire. You're going to trade a $1,000 account. I'm going to teach you what to do. If you don't do it, you'll lose the money. And you'll reload it, and you'll lose it, and I'm out. I'm not going to work with you anymore. Because if you don't do what you're supposed to do, why would I work with you? I work with karate students, and I teach them stuff. If you don't do what I say to do, get out. I don't care. I don't need your fucking money, and I don't need the aggravation. I want you to become consistent with your trading so that you'll sell a car, or maybe you'll buy a piece of rental property and you'll sell that and make $20,000 profit, and you'll take that $20,000 with $10,000 you saved, and you'll have your $30,000 trading account. That's where I want you to get to, because then you're going to have a lot of fun. Not going to have a lot of fun if you start out with a $20,000 or $30,000 account and lose that, I mean, I had a net worth sufficient such that if I lost that 40,000, that it wasn't a ball breaker. I mean, it hurt. 40,000 is a lot of money, but in relationship to the amount of money that I have, fortunately through my real estate investing, didn't alter my lifestyle. But it hurt. $40,000 is $40,000. Think about what you want to do, and look at the currency markets as a tremendous opportunity for you, whether you're 25 years old or whether you're 55 years old. I didn't start this stuff trading until I was in my 60s. And Jesus, if you're 60, you've got more than $3,000 to your name. You've worked hard your whole life. You know, I mean, it's a sad fact, but the average net worth of the 54 to 64-year-old age group in America today is just over $100,000. You know, if you had to cash that out and live on the 4% rule off that, that's $400 a month, $300 a month. Along with Social Security at $1,500, you're under $2,000 a month in income. You can't even rent an apartment where I come from for, you know, Jesus, I don't think you can find anything under $1,800 a month, $1,700 a month. But if you're older, you can find that $20,000. You can find that $30,000, $50,000. $50,000 account, 20%. That's $10,000. $10,000 on with your. What are you going to make? What are you going to make at $50,000 investing in stocks where people are lying and cheating and the accounting is all fucked up, and they're going to come out tomorrow with an announcement that the company's been projecting their sales figures by projected earnings as opposed to real earnings, and the stock goes. What are you going to do then? Where's your protection? You set a stop and it blows right through the stop. Stops aren't safe in the stock market. They're not safe in the futures market. Man, think about this stuff long and hard. We have tremendous opportunity. If you're young, you can work 2 shifts and save up that money. If you have confidence in something, you'll find the money to have a significant level account. Listen, let me tell you something. If you're 25 years old and your net worth is $20,000, and I told you there's $300,000 buried in the woods just outside of San Diego, California, and you live on the East Coast, there's $300,000 buried in the woods, and I can tell you where that is, but you got to pay me $40,000 to go get it, and for me to tell you where it is. Don't you think you could come up with $40,000 in a heartbeat and a half to go get that 300? You bet your ass you could. Think about it. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.